Hi, good afternoon and welcome to Your Stocks. I'm Pavitra and today we have lots of queries which have come in, so we're going to get to all of that. But first up, just a quick look at the markets because we're just marginally off the day's high right now. It's been a good trading session so far, almost 90 points higher on that Nifty, so above that 17,800 mark quite well, 0.5% higher. What's also encouraging is that the mid-cap and small-cap end of things looks pretty good, right? So it's holding up really well. The mid-cap index up 0.5% as well, and the advanced decline is also looking quite positive. So all in all, it's been a good session ahead of the big cues that we have domestically with the earnings season starting and the inflation print, as well as the global cues that are lined up. But with that, I'm going to invite our guest today and get straight to the queries because, like I said, we've got many which have come in. We have Sharad Avasthi joining us. He's head of PCG research at SMIFS, as well as Rajat, Bose, to answer all of the questions on the technical side as well. Gentlemen, good afternoon and thanks a lot for joining us as always. I'm going to get straight to the questions and try to take as many as we can. Chandan has written in to us from Vizag. He holds 200 shares of Bajaj Finserv, which he bought at 1720. And then he also has shares of Bajaj Finance. He has 150 shares at 7,034. He's a long-term investor and he wants to know whether to hold or sell at current levels. The Bajaj twins, let me come to you first, Sharad, on this. I know there has been a correction, but everyone that I've spoken to about this, so far thinks that these are good ones to hold on to, especially if you have such a long-term horizon, right? Would you agree?
Yeah, longer term horizon, these stocks could be good bets. The only thing is that after the rise that Bajaj has already seen, not in terms of share price, but in terms of the business volumes, I think Bajaj Finance becomes one of the largest NBFCs in the country now. And now with the mutual fund advent, how they transform things and everything that we need to see. But right now what we think is that in terms of growth, it would be difficult for them to continue growing at that stage. So I think there could be a possibility that they might not grow, even though 27% growth happened last quarter also. So that's not slow by any count. But I think the valuations are a tad on the expensive side. The stock is already trading at somewhere around 4.5 times FY25 expected book value of 1,300. So that is one place of concern. So I think that is where I think Bajaj Finance and Bajaj Finserv also derives a lot of its valuation from Bajaj Finance only. The Bajaj and the life insurance and general insurance business contribute around 400-500 to the SOTP. So I think Bajaj Finance not being in a very robust growth mode or in terms of valuation, there is not much scope for it to improve. So both stocks, I think for Bajaj Finserv, the fair value is around 1,300, 1,350. And for Bajaj Finance, I think roughly 5,800 is the fair value. So I can't see much upside. So the best possible thing would be that for a year or two, you might not see much of a correction. Rather, you could see some time correction on the stock.
All right, got it. That is on the Bajaj twins. Rajat, I want to come to you as well on this. I mean, I know there has been weakness in the recent past, but how would you look at it from a slightly longer term perspective if you were to take a call on both of these names?
Yeah, good afternoon. Thank you for having me. I would say that regarding Bajaj Finserv, from a technical perspective, both 14 RSI and MACD on the daily charts are showing positive divergence. That means it might have formed a bottom and likely to move up. But unless the stock fails to take out, say, 1338, which is not very far, and that needs to be taken out decisively, you won't see much of an upside. But I would still suggest, looking at the positive divergences, I would still suggest to the investor that put a stop loss at 1245 on a closing price basis and continue to hold on. Regarding Bajaj Finance, now I would say that it is also consolidating. Chances are that it will move up. For him, I would suggest 5,500 as a stop loss on closing price basis and carry on, because there are certain signals in Bajaj Finance that it might crawl up, at least, if not sharply move up, but at least crawling up on the upside, say about 8 to 10% over the next next 3 months, 1 quarter, or a little more. There is a possibility that that kind of a move can happen here. So it's a hold too.
All right, that's a hold too. The next query comes in from Akshay Patil, who writes to us from Mumbai. He holds 200 shares of Titan, which he bought at 250 rupees a share. He's a medium-term investor and he wants to know the future prospects of his investments. First of all, he bought Titan at 250. It's currently above 2,500. So there's been solid money that has made here. And I mean, this must have been held for at least a decade, if I'm not wrong. Sharad, coming to you on this one, he's clearly held it for a long time. He's willing to hold more. He's been rewarded for his patience as well. Is the call to keep holding this one and just have it in your portfolio?
Though it's an excellent story to have held on over the last 10-15 years, obviously. But from here on, I think there is a possibility that a large part of the growth that we have seen over the last 4 or 5 years is largely a component of higher gold prices. And my view is that gold prices are not very bullish over the next 4 or 5 years, maybe, unless and until some geopolitical issue comes up and causes some unnerviness. But otherwise, I think gold prices should more or less be steady, and even the currency tailwind that domestic gold prices have been benefiting from should not be there. But still, I think the company could grow at, say, 25 to 26%. But valuations are a tad on the expensive side. I think fair value should be somewhere around 2,100, 2,200. And FY24, we are expecting an earnings of somewhere around 55 rupees. So it's a bit on the expensive side. So I'm not very comfortable holding at these levels.
All right, got that. Rajat, do you agree on Titan? I mean, while he has made solid money, do you think a bunch of the gains are already in?
See, it depends on your time perspective. If you are, since he has been holding it for more than a decade, and if he wants to continue holding it, say another decade, then I would say that a stock that produces such kind of ROCs might come down a bit, but over a period of time, Titan can still do well. I broadly agree with Sharad that immediately there would not be much of an upside. At the max, over a period of, say, next 3 to 6 months, any upsurge in the market happens, and this can scale up to something like 2750, 2800. But till such time 2800 is decisively cleared by the stock, there would not be any major upside. And on the other hand, it can actually slide down to something like 2250 or so. So put a stop loss below 2200 and hold on if he wants to retain its position. If I were in his shoes, since I'm already enjoying a 10 bagger, I would continue, because these stocks may languish for quite some time and then they give a good upsurge. So why spoil an investment?
Okay, that is the complete fundamental as well as technical perspective on Titan. And with that, we are going to move on to our next query. This one comes in from Abhishek Verma, who writes to us from Chennai. He holds 1450 shares of Vedanta, which he bought at 308 per share. He's a medium-term investor and he wants to know whether he should hold or sell this one. Rajat, Vedanta has seen a big correction. I mean, it's down over 30% in 1 year. From a medium-term perspective, so say 1 or 2 years, is this worth holding on to?
I would say that he should get the dividend, which is due. I think payment date is 27th April. It's already ex-dividend, so he is going to get the dividend anyway. One should exit the position. See, I did a study for Calcutta IIM on these kind of metal companies and all. What I found was there that generally, if you are a long-term player like Anil Agarwal is, you will see that they tend to buy every time you will see some kind of a bottom happens in mining and metals industries in the last phases of the decade. That is, say, any year that ends with 8, 9 and 0. This is not my study, by the way. I simply read the study. That is, it is actually Reserve Bank of Australia did this study, and lots of such astute investors in minings and metals, they prefer to enter into these kind of stocks around those years, and they tend to peak out say in the years between, say, 4 ending with 4, 5, 6 or say 3, 4, 5. So around these levels you will see a top. So it would be better at some point in time exit Vedanta, re-enter towards the end of this decade.
All right, got that. That is on Vedanta. Sharad, your call. I mean, like we were pointing out, this is a stock that has corrected significantly, and the person who sent in the query is willing to hold only for a medium-term perspective. What would you suggest him to do?
I think there is valuation comfort. The dividend yields are also robust. Even in medium term, I think the news flow regarding the parent amassing some money from some investors today, probably there is a news that they are trying to get some money, which will curb the liquidity problem that they have over the next quarter or so. So I think if they get that 2 billion kind of inflow, that would be substantial to curb that problem. And then beyond that, I think earnings would be normalized. Aluminium is the main business from where they are making the maximum amount of EBITDA, aluminium, zinc, and oil and gas. And I don't foresee much of a problem in either of them. Oil and gas might be a steady downtrend kind of story, but zinc and aluminium, I think those businesses should do very well. Zinc, lead, silver, aluminium, copper a bit. So I think next year the earning could be somewhere around 40. As the overhang around the parent's liquidity problem eases out, I think there is a possibility that the stock starts trading at somewhere around 8-9 times. So I think if you get a price of somewhere around 360, that is the price at which I think one can think of exiting. And I think what Rajat was referring to is largely also in sync with a cyclical behavior of these stocks, which is a 7 to 8 year kind of industrial cycle, where you could get those peaks and troughs basically for these stocks. But currently, I think the valuation and the numbers and the prices don't really signal that these stocks are at a peak valuation or peak kind of performance. So I think hold on, if you get somewhere around 360 over the next 6 months to 1 year, you can think about exiting.
All right, I'm sure that will help our viewers. That's on Vedanta. The next query comes in from Mayur Shah, who writes to us from Gujarat. Now, he holds 25 shares of Dixon Tech at 4,600. He also has 100 shares of Nazara Technologies, which he bought at 1,030. He's a long-term investor and he wants to know whether he should hold or exit. And he was also asking if he should exit, should he switch to some auto names such as Maruti or Tata Motors? He is sadly losing money on both of these. I mean, I think for Nazara, it has almost half from the price where he bought it. Yeah, Nazara he bought at over 1,000. It's currently around 550. And Dixon also is down around 25% in just this year alone. Sharad, your call on both of these. We'll get to, whether Maruti and Tata Motors are good bets or not, but definitely seeing some cuts here.
Yeah, we have seen some sharp cuts, and these come on the back of both stocks trading at abnormal valuations in the risk-on that we saw globally. And comparable valuations lead you to such kind of problems. But in case of Dixon Tech, I think the way they are expanding, the type of demand that we will have at the domestic level, and even the export opportunities that are opening up once they have established relationships with international players, and the expansion that they are doing, they are benefiting from the PLI. The locally printing of circuit boards is something that should benefit Dixon big time. So we are expecting Dixon to have a PAT CAGR of somewhere around 50-60% over the next 2 years. And ideally, I think for a business that grows at that rate and is a decent management and the return ratios, etc., are good. So I think a 40 kind of multiple should not be difficult. So on a 90-91 rupee kind of EPS, a 40 kind of multiple. So Dixon, I think he can hold for a target of 3,600. And Nazara Tech, again, a good company, the way they have moved in from making flash games to current FPS regime and the online gaming regime and betting regime. I think they have the full basket ready. Usually the companies they take over, they have largely grown through the inorganic route. Usually they take 3-4 years to monetize big time out of those assets. And I think gaming as an industry should have good prospects in India as well as globally over the next 4 or 5 years. Particularly mobile gaming with the advent of faster internet and more stabler internet. And even card games and everything are growing at a very rapid rate. For Nazara also, we expect the CAGR for the next 2 years to be 60-70%. And now the valuations are not very frothy. So I'm expecting an earnings of somewhere around 20 rupees maybe by FY25. And based on that, I think a 40 kind of multiple is easily possible. So for a target of somewhere around 800, you can continue to hold Nazara as well.
Okay, can continue to hold both of these stocks. Not bad companies, just that the buy price is pretty high on both of these, on Dixon as well as Nazara. Sharad, you want to separately give us your call on some of the auto names he mentioned, Maruti, Tata Motors, or if there's anything else that you like from the auto pack?
No, I think I like the whole pack basically. Tata Motors is our top bet. We hold it in our PMS schemes as well. And we believe all the three engines are firing for them, whether it's the CV cycle, the passenger vehicle cycle, the electric vehicle cycle. The use of the new platform from the JLR version is helping them. The new launches from JLR are picking up well. China reopening and functioning fully should help them. Even Maruti, we are very positive. We think fair value should be somewhere around 10,000 on Maruti as well. The next 2-year growth should be very good. CNG, etc. should also make a very strong comeback as prices are coming down. That should help Maruti. The EV launches, the new model launches, that should help. And the per unit price has already gone up, I think, realization wise for Maruti, and it should go up further with the launch of premium products as well. I think it's very positive for both companies, and the supply side issues are gone. So I think Maruti for a target of somewhere around 10,000 and Tata Motors for a target of somewhere around 600.
Okay, got that. In fact, on Tata Motors, we just got the JLR sales figures as well, right? And looking extremely solid there. But let me get Rajat into this query as well. Rajat, Dixon Tech, Nazara, he is losing money on both of them. And what would you suggest him to do on both of these names? Do you think it's worth holding on for some time at least?
Yeah, now there is a possibility that there might be some kind of a corrective move on the upside, and so I would suggest a stop loss of 2700 for Dixon, and but if you have to hold it for medium to long term, then you need to watch out for 3350 mark, because once it is decisively taken out, then only you will see further upside. Otherwise, any excursion on the upside from here would be capped at 3350. Regarding Nazara Tech, I would say again that 480 should be the closing price stop loss level. If it were to fall below that, definitely exit regardless of how much money you are losing, because in that case it may fall much further. And on the upside, if it were to take out the range between 625 and 675, this 50-point range is a potentially strong supply zone for Nazara Tech. If that is taken out, only then an uptrend would be sustained. Otherwise, around those levels, one should seek an exit from Nazara Tech. I'm not commenting on Tata Motors and Maruti because from SEBI I hold a research analyst registration, and if I suggest alternate, that means I'm actually donning the shoes of an investment advisor, which I am not. I have not taken registration for that, so I'm sorry. I can't comment on the other two.
No problem at all on... Of course, we completely understand, Rajat. That's totally fine. But with that, we are going to get into a short break. You don't go anywhere. There are lots more stock queries which have come through. We'll be back in just 2 minutes to take all of those. Welcome back. You're still tuned into Your Stocks here on CNBC-TV18, and we have Sharad and Rajat with us to answer all of your stock queries. So let's get back to those. We have Sri Charan Dasari, who writes to us from Andhra Pradesh. He holds 200 shares of Lupin, which he bought at 900, and 300 shares of Chemcon Specialty Chemicals, which he bought at 400. He's a medium-term investor, and he wants to know whether he should hold or sell these names. Rajat, your call on both of these, Lupin as well as Chemcon?
See, regarding Lupin, I would say that its correction appears to be over, and since its correction is mostly over, you would be better placed to hold on to the position with a stop loss below 628 on closing price basis and carry on. Probably he might see some upside. Regarding Chemcon, I would say that I give a very close stop, because if it were to fall below 240 and closes below that, then there are chances that it may go down further. On the way up, if you see that the stop loss doesn't get hit, but it moves up, yet it stumbles around, say, 285, which is a potentially strong supply zone, then one should exit if it fails to take out the 285 level. That's it.
Okay, got that. And with that, we're completely out of time on this show. So Rajat as well as Sharad, thank you very much as always for joining us and helping us with all of these individual stock queries which have come in. Remember, you can always email us your queries as well, and we will keep addressing them with our experts on this show. For the markets, by the way, it's holding up absolutely fine. 17,800 on the Nifty, looking extremely solid. The tech names, by the way, ahead of TCS's earnings, all at the high point of the day. You have TCS also, which itself is up 1%. But all of the names, so Infosys is at the high point of the day. You have Tech, Mahindra, Wipro, all of these seeing some good gains right now. Of course, the top gainer is still Divi's Labs. No stopping that one, almost 10% higher there. We're going to wind down on this edition of Your Stocks, but you guys stay with us because closing bell comes up next for the final hour of trade.